Microsoft, here we are. All right, so Microsoft. So far, we're up 21% year to date. AI Capex is soaring to 80 billion for them. And Azure's eating cloud market share like a buffet, which are all great signs for this company. So going over quickly, estimated revenue, we're looking at 73.8 billion, up 14% year over year. EPS, we're looking at 338, which is up 14.5% year over year. The key focuses here are going to be cloud growth, AI monetization, and the FY26 CapEx look. Wall Street is as bullish as it can get. 100% of visible alpha analysts rate Microsoft as a buy right now. Citi, Wedbush, and Jefferies all raised price targets to $600 plus, and traders are betting on AI plus cloud, giving them huge margins of growth. Now, what are we going to be watching for this quarter? First things first, intelligent cloud, which is their growth engine. Azure is projected 34 to 35% year over year growth, constant currency. Segment revenue is looking at 28.9 billion, up 22%. And Microsoft continues to gain enterprise share. Azure's Copilot AI integrations are getting traction and helping push margins higher. We're also seeing a productivity powerhouse. Office 365 plus LinkedIn was a $32.1 billion segment in revenue this quarter, 12% year over year. Copilot adoption, it's boosting right now, and steady LinkedIn engagement despite macro hiring headwinds for it. Now, the question here is, are businesses upgrading to premium tiers, or are they sticking to that base tier still? Because again, that's going to be more revenue in their pocket. Personal computing resilience. Surface, Windows, and Xbox, 12.4 billion in revenue, only a 1% year over year gain, which is a little concerning. Xbox and Minecraft saw users surge thanks to blockbuster gaming releases. PC shipments are globally rising again, 6.5% year over year. Watch for Windows upside surprise here potentially. The AI capex, is this fuel or fire hazard? Microsoft is in a AI spending arms race, as we just saw with Meta looking at expectations of raising their capex to 75 billion from the current 70 billion. Microsoft's full year 2025 capex is at 80 billion currently. Full year 2026, the capex outlook, slower growth, but it's still going to be massive. So that's just something we're going to have to wait to hear on the call. And then the data center expansion, multi-gigawatt builds across the US. Think Project Prometheus. But here's the risk. Alphabet just raised 2025 capex to 85 billion. Meta, as we mentioned, is probably going to go harder. Are investors going to start worrying about those returns? Because that's what everybody's going to be questioning. Now, why does this matter to the market? Well, AI monetization for one. Microsoft is winning early with enterprise Copilot integrations that other companies just have not been able to achieve. As Eric mentioned, he doesn't use the Meta AI. He uses ChatGPT. I'm the same. I don't think I've ever used Meta AI. And quite frankly, I don't think Meta is expecting people to use Meta AI other than to help them write better ad copy, get better engagement, which will in turn drive them to spend more money, because at the end of the day, the ads game is a pay to play game, baby. You got to pay if you want to play. Now, cloud dominance. Azure is still second only to AWS, but it's gaining ground fast. And then the valuation, is it justified? Microsoft trades at a 12 times forward sales multiple. Can earnings support those premiums? Now, our big risks with Microsoft we're looking at: AI capex bloat. Can margins hold? Windows drag. PC demand is still volatile here. Gaming softness. If Xbox engagement slips post, think Minecraft hype is starting to fade. And regulatory overhangs in Europe and US around cloud, search, and LinkedIn. So really what's going to make or break this rally for Microsoft is their full year guidance of 2026. Key things to watch on that call. Again, updated CapEx plans, Azure client pipeline plus margins, Copilot usage metrics, gaming, LinkedIn, and enterprise seat growth as well. So they have one of the more bolder bets in the market right now, but also they kind of have the stuff to back it up. But that full year guidance will be the thing that could completely blow the wheels off of this rally, because with these bigger companies, if their guidance doesn't come through, as we've seen with even smaller companies, if it's not where people are expecting, think of that 10x for someone like Microsoft or Meta. The reaction is going to be 10 times worse than what you would see with a normal company. But the other flip side of that coin is you will see recoveries at a much quicker rate. And that's where you can look at volume shelves and where the bottom whale targets are and where are people selling big money prints of puts, because that's what's going to tell you where they really think support is going to gain if this thing does fall off of a cliff at any point.
Very good. I wanted to make sure you guys see this in terms of, first off, if I'm just looking at the chart, we've got a little bit of bearish divergence. We just keep seeing it head up in this little channel that we have up here. So I want you guys to notice, since it popped from last earnings, right? From April, we saw it pop up from there. Then we've just been in this upward channel this entire way, okay? There is a bit of bearish divergence when it comes down to my stochastic versus heading up higher there. But, well, another thing is it's also near all-time highs. So that's something to consider. Now, does it mean it can't go higher? No, it definitely still can. And especially with how strong it is, I still do think we could potentially see it further up, but that would definitely be a more long-term play for here. In terms of earnings too, look at all those green E's at the bottom. The only last time they missed was 2022 in July, okay? So all green E's all the way up through there. So is it priced in? I would definitely say that it's very likely a lot of this stuff that we just talked about has already been priced in. Now, the one thing, and I like to use this as our indicator, what's going on stacks? Well, starting off, there are a lot of calls being sold, but if I go and I filter for just the buys, most recent sentiment, especially where all the big money is, 8 mil right here, 1.3 mil, 1.25 mil, these are all calls being purchased. October, August, and December. Now, if I was looking at an earnings play, so looking at what is being purchased, $5 for the December ones, 600 strike, that's still pretty far away. The August, this short-term one is one that really makes me say, okay, they definitely think it's headed up, because this only has about 2 weeks, a little over 2 weeks, almost 3 weeks to go before this one would expire. 530, okay? And then our unusual but also big money is aiming for December, the 560 calls, 1.66 mil, and it is up a little bit from there, but definitely they probably expect it to continue higher. Now, take a look over on the right side. The big money, they've spent well over $1 billion. Oh, here's exactly $1 billion that was spent on the 18th. But add up all these numbers on the right, that's probably almost $3 billion being spent on Microsoft over the course of the last 2 weeks. So dark pool, big money sentiment, I would definitely say is more bullish than bearish here.
Well, I was going to say one thing you also can look at is for dark pools. I've been doing a little bit of like digging in the background. Is a lot of times when we see sell-offs, if you look at previous dark pool prints, those are areas where we'll see it typically rebound, because that's where, one, people deployed a lot of cash, so they will potentially deploy more down at those levels. And then on top of that, those can be used as like kind of your bottom out zones for stocks that are flying a little higher or are maybe moving a little more aggressively. So things like Microsoft, SPY, any kind of big type of names, you can always use the dark pools as kind of extra sentiment in a sense for if you're unsure. Because if you're unsure about the options play, if someone just dropped 583 million on shares, then I'm sure your options play, if it's far out enough, should be pretty safe.
Yeah, I'd say Microsoft definitely leaning more bullish. At least I would expect earnings to be a beat. Hopefully, I would say price continues to go up because of their future guidance. They seem like a very strong name at this point. I'm not loving how it's only gone up since, like I said, I want to be bullish on this. I think it's probably bouncing off this lower end of this, and we're going to see it make new all-time highs. So it could be above that 520 range pretty quick. But as we all know, just because it reports a beat, a double beat, does not always mean if they are, but the things that you have going for something like this, you can expect that everybody that's working in this company, all the CEO and everybody who are going to be on that earnings call are going to do their best to try to make sure they push this name up higher. So you do have a lot of forces aiming to push it higher. I would definitely say after earnings, or at least by that Wednesday after hours, I see it retesting this high, this 518. A lot of the stacks prints say it's aiming for over 520, and 530 is kind of what it's talking about. So might be a decent earnings play to take a look at, though. All right,